So let's talk generally about retail before we get to the specifics of some companies. And I'll put up a chart here quickly that shows retail sales, U.S. retail sales. It's been basically bumping around at the growth level, around the same level for some time now. Give us your sense of where retail sales are and the U.S. consumer is.
Well, the consumer is in great shape. If you look at retail sales in the first half of the year, we're talking north of 5%. And that would come out of the MasterCard numbers. And what you're seeing is a consumer that's seeing the best results since 2012. So it's a very healthy consumer. They're shopping, they're buying. And the results that you saw in the second quarter reflect that. And the first quarter results reflect first quarter and second quarter results for the 6 months reflect a very, very strong earnings reports.
It does seem that one of the limiting factors generally for retailers has been costs, right? That's been a concern. You're looking at some squeezed margins at some of the retailers. You've got freight costs that are going up, right? You've got, in some cases, input costs that are going up. Certainly, labor costs have also been rising. How much of a problem is that going to be for the retailers?
Well, if I look at it over the last 6 months and the second quarter, the margins were reasonably healthy. You had good full price selling, inventories are in line, and they're coming into the fall season in pretty good shape. Having said that, you get into the issues of the tariffs, you've got continued labor wage increases, and you have some risks going forward, so it's fragile. And I'd be concerned as we look at some of the looking at the risks associated with tariffs, but I feel very good about where they are.
Well, and to that point, we're putting a chart right now that shows the yellow line being profit margin, the blue being operating margin, sort of over time. Obviously, there's a big dip in 2009. We had the great financial crisis, but generally they've been on the upswing, it appears, Steve.
Yeah, I think you have a very positive trend going on right now, and this is the healthiest I've seen retail in years.
Yeah, it seems like inventory management, among other things.
A lot of it is inventory. It's also better understanding the consumer. Analytics are better. You're much more efficient in your spending. So I think you overall have a healthy environment, but you have a ways to go. I mean, there still is a lot of opportunity.
And a fair amount of divergence, actually, as we talked about. I mean, you really had very different results. I mean, you got Walmart way up at the top, Nordstrom doing really well, JCPenney sort of down at the bottom, but then you have a Macy's. Julie referred to it. Macy's came out with some pretty strong numbers, and they got really dinged in the stock.
Well, I think we've got to look at a longer-term perspective on something like a Macy's. The stock has doubled. It was down at 20, and now we're back up closer to 38.40. And it took a hit on the earnings because of some of just a bounce back off of the expectations. But I think that it's been a remarkable run for Macy's, Kohl's. This morning we just saw TJX come out. These are some very, very good numbers. Having said that, you've got a long way to go. Remember, these stocks took a big hit coming off of 2009 in the recession. They've recovered somewhat, but if I look at it in terms of versus several years ago, the comps really are starting to improve, but they have a ways to go.
Yeah, the last sort of phase of the outperformers within retail have been characterized by a few things, right? Improving inventory management, but also keeping up online. Nordstrom's an example of that with Trunk Club. Walmart's an example of that too. Where's the next phase going to be? What's the next challenge for the retailers?
Well, I think we're in the early innings of what we used to call omnichannel retail.
Right.
You know, Nordstrom's at 35%, Saks, Neiman's. These companies are becoming very major internet players. Macy's is one of the top 10 internet players of overall internet. So you've got a very big presence in internet, but it's not just internet, and it's not about brick and mortar versus just the internet. It's the players that are able to be facile about moving inventory, moving the consumer back and forth between the channels. And that's not so easy because you have to have the technological background, the infrastructure to be able to make it happen. And that's why you're seeing the winners and losers. The ones that are able to play across the channels are doing much better than the ones that are only single channel. Even the internet players, if you look at the Warby Parkers of the world, they're all opening stores. So it's not just about being internet only. Now everybody wants to be in brick and mortar as well as the internet.